Let's talk about real estate. What's been happening the last week, maybe a few days. Jim, how are you?
I'm good, my friend. It is July 1st. Can you believe that? It's crazy. What
Oh,
happened to
damn, dude.
June? Yeah.
I actually didn't know yet. That's terrible. That's terrible. July already. Dang. Okay. Well,
It's July, man.
I've got a few things to show in regards to listing prices and I would say affordability for buyers in more areas across the United States. Now, there's not any talk of tanking in any areas, but we are seeing some foreclosures in some areas, and it's a small rise in comparison to looking at 2008, right? But still, it's concerning. And I'll show a few things on some charts, but first, I want to go to you as far as rates first, only because the last time we talked steel, everything's fine. And then obviously nothing happened. Rates are still around the same. They're 6.5-ish, right? 6.55, 6.5, 6.49. Where do you see that going first? Tell me.
Yeah, absolutely. So things are still unsettled with what's happening. We have war, we don't have war. We got a peace deal, we don't have a peace deal. I think you're going to see probably just kind of a holding pattern for the next 30 to 45 days. So what it does again creates uncertainty and unsettling. So people just stall. So I do think it delays a lot of activity for the next probably 30 days, 45 days. Also, people are watching the World Cup. 4th of July. We have a lot of
Oh, that's true.
vacations right now. People are trying to get in their vacation before the summer is over. So I think we're going to be in kind of a steady marketplace. Not too much of an adjustment on rates, in my opinion.
Okay, on that piece, only because in our area, we tend to help out. It's split 50-50. So I'm in a heavy uh, business-oriented area. I've got the largest pharmaceutical in the world in my neighborhood. So I have people
Is that
that have
Botox? Just kidding.
That's right, dude. Number one. Oh, that's funny. That's good. Can't you see, dude? Everywhere. Like Botox everywhere. Um, we have people that have actual jobs, right? That get paid by a company. And then the other half is like they're independent contractors, they're business owners. And so I get the fact that it's easier traditionally going to a bank credit union to help out the people with W-2s, right? It's easy. But when it comes to independent contractors and business owners, how do you think we should be approaching it with what's happening? Because I think they're more sensitive to uncertainty, don't you think?
Absolutely. And you have people that don't fit the traditional box of having a consistent salary and consistent bonus. With the economy going all over the place,
Yep.
it's really spotty. So you have, I look at this as an opportunity for a lot of self-employed borrowers to know that they may have not have a cycle that's a 12-month cycle for their business model. So we have to think of other creative ways to help them qualify because a lot of people that are self-employed are either making investments in their business, they're taking out different types of loans, or they have a really big windfall by hitting a market at the right time. So what ends up happening, sadly for those self-employed borrowers, a lot of times they're stuck in these guidelines that are archaic that really only fit W-2 borrowers. So we want to talk about today bank statement loans, asset-based loans,
Okay.
and then profit and loss based loans. So those are three good categories.
Okay. So before you go there, the first thing that I feel, and I know I'm wrong, but I feel it. I think of 08, 09, like stated income, you have a heartbeat, I'm just going to give you a loan. That's what I think, man. So,
Yes,
right.
we tend to the fog, the mirror, and the pulse game are over, but there are a lot more dynamic ways of qualifying borrowers. And how this has come about is it's come about from commercial underwriting has been driven into retail or residential underwriting. So we
Okay.
have a lot more guideline flexibility. Sadly, the big banks are regulated by FDIC, SEC, all these different regulators, so they don't have the flexibility the same way mortgage companies do.
Got
Mortgage
it.
companies are regulated by mortgage regulators. It's different. So you'll see that a lot of people can qualify differently with these non-QM or non-qualified mortgages or alternative documentation loans, which are not a one size fits all.
Okay, so when you're saying when we're helping out, and this is for me personally, okay? When I'm helping out uh, an independent contractor or business owner, are you saying that I should probably have them look at someone outside of their bank?
I would recommend that,
So
yes,
I'd say,
because
hey,
they
hey, Joe, listen, I know you have a relationship with Citibank, right? And they're promising you really good stuff. Do me a favor, talk to my guy, Jim Black, and then compare notes. Is that what you're
exactly,
saying?
exactly, because banks are set on their guidelines. They're regulated differently, so they can't do a lot of the things mortgage companies can because they have credit cards or banking laws or savings accounts. So it's always good to get a second opinion with self-employed borrowers to understand there's multiple ways to qualify. And if you work with a mortgage company, chances are they also have different investors. So we have over 68 different investors. And I always like to have three different solutions for each type of scenario. So we have multiple self employed solutions. So we always want to look at the best solution, obviously, for the client. But we can do that by looking at the, either like I mentioned, the assets, the bank statements for deposits into their business, or look at profit and loss statements and balance sheets. It's just a different way of underwriting and a little more flexibility. Someone still has to qualify to make the payment. We got to make sure that the revenue is coming in to be able to pay the revenue going out. So we do that in a myriad of different ways. But it's a really good approach, especially if someone's been successful in the last 6, 12, 18 months in their business. They're probably doing really well. They're probably on accelerating. They want to make a move. Maybe they're buying a commercial building. Maybe they want to buy another home or investment property. We want to look at those assets and reserves from the business, not from their personal side, which gives them a lot more flexibility.
Okay. I like that, man. I like that. I like giving them the option, and I like having
Yeah,
you as a
choice.
backup.
Choice is great. Again, we just want to make sure that we give someone choices to get off the fence to get to whatever their goals are. And smart real estate professionals have multiple resources that they go to. Everyone is not good at everything. So we got to make sure you go to that right niche or right provider to make sure that they're getting the right answers. Because a bank is not as flexible. Banks are good for their clients that they already serve, but they're not good for new businesses or new business owners or people that have grown or have different cycles in a 12-month cycle of success in their industry.
All right, I like that option. All right, so now tell me what you think of this headline. Let me highlight it here. Home listing prices post another record decline, boosting affordability for homeowners. This just came out today, obviously using Realtor.com data, which is tied to the MLSs because they have all the data there too. Some say Realtor.com data is probably the best out there over Zillow's and definitely over Redfin because Redfin's not in every area. So that's why I love using their data. What do you think, man? Just off of the headline without going into the graphs yet. How do
Yeah,
you feel?
headline means that there's a lower price point of activity, which allows for first-time home buyers or move-up buyers potentially the opportunity to move. That just tells me, in my opinion, that the higher end people are not moving as fast at making big decisions right now. So it tells me that
Okay.
there's more velocity. I look at it as more velocity on the middle to first-time home buyer markets, which is that's how I read the headline.
Okay. All right. I agree with you. So check this out. I highlighted it. June saw the national median asking price fall 2.5% from a year ago to 430,000. And that's as of Wednesday. And if anybody wants the report, just Google it. Realtor.com monthly housing market report. I'll probably click it and put it up there as well so you can see it. But to me, man, it's a slow progression into lower price points, and I think it's going to continue. And that's a good thing for most people. The only bad thing is, dude, that's not happening in a large part of California, New York, and Miami. Like
Sadly,
this
you
is
got to add
happening in the
about,
Midwest,
yeah. Sadly, you got
right?
to multiply that by about 4 or 5 is sadly where we are in California. It's wild.
Yes.
It's wild.
So it's
Yeah.
not equal everywhere, but I think this is also why you're watching a lot of younger people move to the Midwest, trying to find opportunities that make sense because it still is unaffordable in a lot of areas. So one other thing here, that's Danielle Hill, by the way, chief
I love
economist
Danielle.
at
She's awesome.
Realtor.com.
Yeah, I love Danielle. She's great. So
She is, dude. Now check this out. Pending sales rose 3.7% year over year from this for the seventh straight month of growth, even as the share of listings with a price cut shrank. That's interesting. Like more pending sales. And I think the only thing I can attribute it to is summer. That's it. Everybody's like, you know what? The rates aren't getting any better. I don't even know what the hell's going to happen with the war. Yes, no, like we said at the beginning. I need to move, right? What do you
yep.
attribute it to? That or something
Yeah,
different?
it's just I think it's cyclical. I think it's a sign. It's a cyclical thing. I hope the momentum keeps going on. Just like Danielle mentions in her post a little bit above that, she mentions that this is a welcoming sign to hopefully
Yep.
jumpstart activity. Again, we're seeing an uptick in velocity on the lower to middle end, which is good. That lets people move. The higher end, I think, is still going to be really a wait and see with a lot of the stuff with the technology boom, the IPOs, SpaceX, all those people making big investments in those categories. So I like this screen too. Tell me about your price cut approach here.
Yeah,
I like it.
I like this because it's cyclical. Look at the cycle, dude. You have what is it, May-ish through about October, right? And then all of a sudden it just tanks because, there's less homes and people are more if they're listing through the winter, they're not they're just gonna leave it as is. Like I'm not doing a price cut. It is what it is. If they buy it, they buy it. And the highlighted here, this area, let me see if I can highlight it. I can't, darn it. Price cuts approaching normal levels. I think that's the key phrase, normal levels. We're at 18.8% listings. I think some people get scared when they're like, oh my gosh, we're almost at 20% in price cuts. I'm like, guys, that's normal. And in some areas, that's low. You watch your area, take a look at your area and see your price cuts. Sometimes it's 28%, sometimes it's 30%. It just depends where you're at, but the average is 18%. So when you see that anywhere, don't freak out. It's normal, especially during the summer. Look goes up, market for 25 days. I need to sell during the summer. Let's do a price cut, right? So,
Yep.
the next thing here, Jim, new listings improve versus 2025, right? Let's take a look at 2025. That's the dark brown, or if you see it black, that's fine. But dark brown, not too different in a trajectory than where we're at. Check that out. Almost identical. And this is, we're slightly above new listings. I think more people, again, are getting comfortable with that higher rate. Not too comfortable, but comfortable in saying, I got it at 4%. We got to sell, right? It's time. So you're starting to see that a little bit more. I have a question here for you. So, from what you're seeing and your experience in doing this a long time in the mortgage world, if we stay around the sixes, do you think a year from now this is going to follow the same trajectory, just a little higher, like 3% new listings year over year?
I do because interest rates were similar in 2025. So I think that black or brown line in 2025 will have a similar outcome to year to date 2026. If rates were to drop, Then I would see, I think, an increase of listings and new listings. But right now, I think we're going to follow a similar trend to what we're seeing. And that's good to normalize things. If you
Yep,
look
I
at all
agree.
these years, if you look at all these years, they're way, I mean, we had COVID. You got COVID in here, right?
Hmm.
In
The
a
gray
couple of years
area,
after COVID. Yeah,
the
gray area. So
craziness.
yeah, so
Yeah.
we want a normalcy. We want a nice smooth curve, whatever that means. That creates confidence, stabilization, and predictability. Those are the things we want to see when it comes to housing. We don't like
Yeah, I
we don't
like
like
this.
this. Yeah,
No, I don't like this sharp down and up. It
yeah,
crazy
no,
crazy.
yep.
I agree with you on that. All right, one more I wanted to show you. That's days on market. And to me, dude, 53 days on market average. All right. So you look at the craziness, right? This one, and all of a sudden dropping down. And look at all these other years. You got 2021 days on market hit. What was that during the summer months? 30, let's say 33, which is crazy. And look at the yellow line, 30 days on market. That's
Or that
nationally.
was rates. Yeah, that's when rates, the green and yellow line are. Remember, rates were back then about 4 and 3.5
It was
percent, somewhere
free to
in that
buy a
range.
house,
So
dude.
we had to be really competitive as buyers to get that house locked up, right? Because there were so many people that qualified with a 3% rate.
Yeah, and look what's happening right now. Follow the last year, the brown one and the red one. Now all of a sudden it's almost equal. Look at that. And then the other piece that wasn't over on the other side, 2017 to 2019 average days on market. The only difference is we're coming in from a world that isn't used to 53 days on market average and whatever your area is on average. So everyone's freaking out. They're like, how come my home is sitting on the market for 5 months? Oh, we're like, no, no, it used to be, but nobody wants to hear it used to be. This is why
Absolutely.
I love this one. If you guys can just snapshot this, you could use this as part of your listing presentation. Because if you're sitting through and saying, hey, this is our market, this is the national average, this 2017 through 2019 is the average. That's what we're heading into. In fact, that's where we're at.
Yeah, we're right there. It's a perfect inflection point of all three of those things. Meeting, right?
Yes. And
Same point.
now, dude, we've got quite a few listings, and some of them are taking a little longer, and we're starting to have conversations from the very beginning and saying, hey, this is what we're going to do. We'll update you weekly. We'll give you the report. But more importantly, I need you to understand the world, the market that we're in. And it's not going to be like it used to be. It doesn't mean your property is terrible. It just means we have to be a little bit more patient. Um, so it's just part of the conversation you need to have, everyone. What do you think of this, buddy?
I love it. And again, I've sold 24 homes in my life. Every single time I got advice from one of the first agents I ever used in Walnut Creek. He goes, Jim, do you trust me? I'm like, absolutely. His name's Kelly McCormick. And he goes, if you trust me, Jim, and you want to sell this property, let me do my magic. Trust the process. If you want to just
Mm.
if I'm not going to take on a career listing, but if you trust me, just trust the process. So I trusted the process, had that advice now for the last 20 years. It's worked out really well where I've been able to listen to the agents because they know what they're doing. You guys are reaching out. You guys are seeing who's downloading the reports for disclosures. You're seeing who's touring the open houses. You're seeing who's going in with a super key to determine who's walking those properties. So smart sellers listen to agents, and smart agents interview sellers as much as they're interviewing back when they take on a listing. Is a seller going to be listening to my advice? Are they flexible to shift and pivot if the market dictates that?
That's a good point, buddy. I put up the link for anybody that wants to grab it. It's in the chat, and I'll put it inside the Facebook group as well with a couple of slides. Jim, thanks for doing this, buddy.
One more question for you.
Dude,
How many hot dogs are you going to eat on 4th of July for the Nathan's Coney Island hot dog competition?
they don't have a cheeseburger competition?
Well, I
I
think they
know,
know
dude, I'm not
we know
into.
who'd win
I'll
that
go to
one.
Costco. I'll go to Costco. I'll get one. How about you,
I will have some for sure. Yeah, we'll be having fun.
dude?
So
Remember, I can't have I can't have hot dogs with a Botox face. It just it doesn't mesh.
there's no Botox, buddy. No Botox. You're good.
Thanks, buddy.
Awesome,
Thanks,
guys. Take care,
everybody.
everyone.